Alan, good morning to you.
Morning.
Alistair Darling keeps on stressing that there will be no giveaways in this budget. But, of course, we are about 6 weeks away from a general election. It does seem difficult to imagine that there won't be something that he'll do to generate positive headlines.
Absolutely. He's had a windfall of about £2 billion more than he expected from the bankers' bonus tax, and that will be channelled towards helping the unemployed and nurturing the recovery from recession. At the end of the day, the Labour Party has been nibbling away at the Conservatives' lead in the opinion polls, and its strategy has been go for growth and soak the rich, and I think it would be foolish to err away from those strategies. So, yeah, I think there will be some giveaways to help its chance in the election.
Now, on this soak the rich, we've heard Lord Mandelson saying that they may indeed have a little tax hike at the very top end of the scale. Do you think that that's something that might come up in the budget?
It's got to be a risk, yeah. I mean, they've got to give us a bit more details of how they intend to narrow the budget deficit. They say they're going to narrow it by about 4.5 percentage points of GDP. They've only announced, I think, in terms of discretionary measures, 1.7 percentage points. There's a lot more detail needs to come out. Now, if they were to come and give us those details, I think that would scare voters off. I think that's why the Conservatives will loft out in the opinion polls. So what they need to do is find all sorts of tactics to defer our attention to other things, and what's been really popular has been to tax the rich. So taxing bankers, taxing the highest income groups, it's great for popularity and it gives them a little bit of extra revenue, but not enough to plug that hole in the public finances.
Alan, now, we've talked before about how Alistair Darling has been very short on detail, and that seems to be helping Labour in the polls at the moment. You don't think, therefore, that there's any likelihood that we're going to see more detail about what areas are going to be cut and what areas are going to be ring-fenced in terms of public spending?
I think we'll get some, but it's going to be a sideshow. Of those 1.7 percentage points of discretionary measures that I've already talked about, there's 10 billion value for money savings. And I think we'll get the specifics of that, things like online benefits payments, etc. But 10 billion, that's just a fraction of the 180 billion or so of budget deficit that needs to be announced. Again, it's a sideshow. It's diverting attention away from the painful news, which I think will be announced on a later occasion.
Now, will there be even a token move to cut the deficit earlier than was previously planned?
Well, they've had a really good news in the last few months on the public finances, as you say. We have about 10 billion lower borrowing than he estimated back in December. That's great. I think it would be wrong to extrapolate that trend. There's been a lot of one-off recoveries, like the economy coming back out of recession. It's been better news for corporation tax receipts. The housing market stopping falling and coming back up a bit. That's helped stamp duty revenues, but it's not going to continue forever. And so I think we're going to have better news, but don't extrapolate it. It's going to need some painful measures to narrow the deficit.
Alan Clarke at BNP Paribas, thank you very much indeed.